All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Happy Valentine's Day. Market waking up here and getting some economic data that is driving things here. This morning. Just a little bit ago, S&P futures were up about 9 points. We saw S&P futures sell off into the close yesterday, and then you can see overnight futures went and actually hit a new high, right? They pushed on up, and then here in the last 30 minutes, we see S&P futures going from 2760 down to 2740. A sizable drop there, breaking below yesterday's lows and the overnight lows. If you take a look at the euro versus the U.S. dollar, the currency there, you can see the euro popping, right? And generally, when we see a currency move associated, it tells you there's something economically that's happening, and that's what we're seeing here this morning. Euro strengthening tells you something economic. U.S. dollar, something going on in the U.S., just not jiving well with investors. You can see bonds. I'll do ZN. You can see bonds pushing on higher and on some massive volume here. What's that telling you? That's telling you this is something data driven. There's a news catalyst. Something's going on. Well, what is it? Well, it's something where we haven't seen this number move the market in a long time. And that is the retail sales number. And that came out here this morning. And the consensus expected for retail sales month over month was a 0.1% move. Now, this is for December, so this is backwards looking data, but 0.1% gain. Consensus range, minus 0.1 to 0.4. It came in at minus 1.2%. You strip out autos and gas, it's even worse. It is a number that when you look at the number, you look at what it's showing, you have to go back 8, 9, 10 years and even into the financial crisis to find data that is eroded to this, to this point. It's a pretty big drop. Retail sales less autos, a 2% drop from November. Now, when you look, and this isn't giving us the breakdown of the data, but if you look at the breakdown of the data, it's also showing that internet sales, online sales fell just over 3%. In the biggest drop since 2008, and so we're seeing a piece of data come in that's driving things. And yesterday we talked about what the bearish case was, and that the bearish case was pretty weak, right? I mean, it was pretty darn weak, and their case is overbought, and things are going to get worse. Does this add to the bearish case? Oh, you betcha. You betcha. In fact, this is one of the first numbers or pieces of data where we're actually seeing contraction, right? When we talked about some of the data yesterday, and yeah, the data's slowing, but we're not seeing contraction. This piece of data is showing contraction. That's a pretty mean piece of data, here, and it really flies in the face of what the Fed was saying yesterday. Now it's only one data point, but really just, really flies in the face there. Now, alongside with this, we saw jobless claims tick up again. And you can see one of the things that's been going on that's kind of been a little stealthy out there is the jobless claims here in the U.S. They have been ticking up. Now, going into the end of last year, there was some talk, it's seasonal, blah, blah, blah. Normally happens this time of year. Okay, one off. All right, it's kind of dismissed. But you can see jobless claims have continued to rise. And they've continued to rise over the last, 3-4 months here. And that's continuing here today. and the number of new claims, was just slightly higher than what was expected, but does kind of confirm that trend or that pattern of increased claims that we see going on out there. Now, jobless claims number, that hasn't moved the market since back in 2007. It is one of those numbers that for a while it was very highly monitored. In fact, you'd see this number and boom, I mean, the news outlets would have it and everything else because it was a market mover. It hasn't been in quite a long time. So retail sales, jobless claims, and then we had the PPI, which is a piece of inflation data. This kind of on the heels of the CPI that we saw yesterday. And you can see the big miss. Consensus 0.2, which is showing some inflation, came in at minus 0.1. Now, what's the problem with that? Well, the problem with that is negative inflation basically means negative economic growth. In the world that we live in today, that's what negative inflation tends to mean. Now, if you strip out food and energy, which is what the Fed does, they strip out food and energy, we're actually seeing a small uptick in the PPI. So, we're seeing the downtick here with food and energy. We have seen commodity costs come on down here in a significant fashion. But, you can see the PPI, it's had now 2 months in a row of contraction. First time since 2015 that we've seen that, middle 2016 since we've seen that. It kind of takes, no inflation basically takes any Fed case for raising rates and throws it away. But if you see yesterday the CPI, it also missed expectations. It wasn't contracting, but it also missed expectations. So lower inflation, which, tends to be translated in the market as lower growth, combined with one of the worst retail sales numbers in years, and a little bit more of an uptick in jobless claims, is the catalyst for this market reversal. And you can see the volumes here on S&P futures. This is not a small volume move. This is pre-market. And we're getting volumes that, are just slightly lower than what we tend to see on the market open. So, there's some pretty hefty pre-market volume, coming into play here this morning, in a lot of, or in the futures market, and we're seeing it in bonds, we're seeing it in currency, out there today. This drop in online sales, you think about who that would affect, and Amazon is kind of your natural thought process, right? Anytime you talk about online sales, but if you think about an online sales drop of 3%, you think about some of the companies that are growing, and their growth factors are the online sales. They're not necessarily online sales companies, but that's where some of their growth catalysts are coming from. You look at some of the things like a Target, and there could be a little bit of trouble here for them here today. At Best Buy, Bed Bath and Beyond, where you can see a little trouble in some of these they're traditionally known as brick and mortar stores, but one of the reasons they've been upticking is because they have had an online presence that's been growing. We could certainly see a little bit of downtick come into this space. Take a look at some of the casinos. Generally, when we get some negative consumer data, the casinos will get hit. Because you think about the casinos, they're you think about what consumers will cut first, right? Are they going to cut toothpaste and toilet paper? Are they going to cut food? Are they going to cut even vehicles? No, generally they're going to cut some vacation trips and especially some casino spending, and to see, Wynn Resorts, Las Vegas Sands, have some weakness here today. And obviously earnings are wrapped around some of these, so I don't necessarily say, hey, go out, run and play them, but this is an area where we could see some very sizable weakness come in if the market decides it wants to continue selling on this data. Now, have to realize this data is a one-off, right? This data is going to pick up some of the fears that are out there, but it is kind of a one-off type of day, and it's not a trend-making day. It's a warning sign type of element here, and that's what we're seeing, at least so far. But we've talked about how overly bullish the market is. Yes, the bulls are in control in almost everything. When we see times like that where the bulls are in control of almost everything, it doesn't take a whole lot to switch the needle a little bit. And I do think that risk is pretty high here today of that needle being switched in a substantial way. But obviously I've thought that here for a while. And, as far as, the absolute timing of it, ultimately in hindsight we'll know, as things go, we can only kind of speculate a little bit overall. Okay. So anyway, that's what's going on here pre-market this morning, and setting the stage here for the market today. There's not a whole lot of new stuff coming later on today. Yeah, we'll have the natural gas inventory report. We'll have more Fed speak. But, we'll have some bond auctions, but, nothing too substantial, here. So it's one where the tone has been set, and, we'll have some more data tomorrow. I think, as I mentioned earlier this week, this Empire State Manufacturing survey is going to be a big one. But you never know when we're talking about these types of environments which piece of data the market's going to grab onto. But it's very clear that the market has grabbed onto the data here this morning, just by what the volumes are and the substantialness of those volumes. Thanks for hopping on. Have yourselves a great day, and we'll talk to you later. Take care.